Since the start of the COVID-19 pandemic, the US government added about $4 trillion to the money supply. Today, we'll get a peek at the impact of those extra dollars on inflation when we see the March Consumer Price Index. Experts expect the index to increase from 1.3% in February to 1.5% in March, which is within normal limits. But consumers will realize that regardless of what we see in the March index, prices are increasing. Supply chain shortages and surplus of capital set investors shopping for assets during the past year. The stock market is up, housing continues to rise, Bitcoin just hit another all-time high, and with the value escalation of these electronic fungible tokens, it looks like investors are searching for a place or inventing a place to park their money. Inflation is real and will begin to trickle down effect from assets to consumer goods, which we've already begun to see. Regardless of what data comes from today's report, consumers and investors alike have seen the impact of inflation over the past year. Lumber, copper, structural steel, and even drywall prices are rising. We can expect this trend to continue in areas like fuel, food, and transportation over the next several months. For real estate investors, the outlook is very positive. We should be confident in the current market with an expectation of a continued price escalation for the foreseeable future. Check out today's March Consumer Price Index and let me know what you think.